Hello and welcome. I'm speaking quietly because I'm sitting under a tree on the island by the edge of the beach, and I've just noticed that the tree has filled up with pigeons. A lot of them. I've absolutely no idea how they got here, but they're all looking at me and they all seem rather annoyed. It must have been something I said. Typically, not a parrot in sight when you need one. Anyway, today we're going to be talking with Mark about his investment in GREGGS and taking a look at how that stock is performing, and we'll also be discussing our visit into Manchester to go to a GREGGS store for lunch. All to be revealed in this, episode 34 of the Desert Island Investor. Go on, clear off. This episode of the podcast is generously hosted by Progressive Equity Research. Visit their website at progressive-research.com. Good afternoon, Mark.
Good afternoon, Paul.
Okay, so in this episode we cover GREGGS, ticker symbol GRG, which we last discussed, very nearly 2 years ago. And this is on the back of you recently increasing your holding, Mark.
Yes, I'll be elaborating on the investing case, but ahead of this episode, for some time you've been bleating that I go gallivanting to AGMs, private meetings and taking part in site visits, while you were always marooned here on the island. So this time, I took you along to visit one of GREGGS' 2,638 shops for what I call a slap-up meal. And it is fair to say we did learn a lot from the experience, and this is something we're going to share.
We are indeed. And yes, it was an experience. I wouldn't describe that as a slap-up meal personally, but anyway. As ever, to start off with, can we have the base numbers, please?
GREGGS has a market cap of 2.1 billion, a yield of 3.3% and a PE of 13.8, and that's based on a share price of £20.76.
And how does that compare to the last GREGGS episode that we did in August 2023?
Back then, it had a market cap of 2.5 billion, a yield of 2.4% and a PE of 20.2. And that was based on a share price of £24.36.
Okay, so you've been rewarded by your patience with a drop of 15%. Can you please explain that?
Share prices are generally bouncing all over the place, and most shares have enormous differentials in year highs and lows alone. If just look at a few examples for yourself, but GREGGS were trading as recently as September 2024 at £31.80. The shares drifted down, probably not helped by the Reeves budget with those increased NI costs and minimum wage increases that will particularly impact retail. On the 8th of January, the shares were trading at £26.27, and on the 9th of January, a trading update was released for the fourth quarter. Now, full year sales were some 2 billion, 14, sorry, well, so make it simple, 2014 million, up 11.3% on the previous year. That was nice. Like-for-like sales were up 5.5%. And when we say like-for-like, that means comparing only against stores that were operating 12 months ago and not any new openings. That's where the difference between the 11.3 and the 5.5% is. However, in the last quarter, the momentum had slowed and like-for-like growth was just 2.5%. The result was that the shares ended the day at £22.39 down from the previous close of £26.27. Don't panic, Captain Manring. People have been anxiously asking the Rolling Stones, is this your final tour? They've been asking that for 40 years. And so it is with GREGGS. The question keeps coming along and it's put forward, how long can you keep growing? So it's not stopped or retracting, but growth has slowed. And as ever, the stock market and investors factor in expectations. And sometimes results are great and the shares are still written down as the expectations were for fantastic.
I can see why a decline in growth would be a concern. So what's the picture been since then?
Year-end results were released on the 4th of March 2025, and pre-tax profit was 203.9 million. That's up 8.3%. And there was a dividend of 69 pence. That's up 11.3%, and that's covered 2.2 times by its earnings. What they did reveal was that in the first 9 weeks of the new financial year, was that the like-for-like sales growth had slowed to 1.7%. They cited bad weather in January, which thankfully I missed, and this improved somewhat in February. And in the past, GREGGS have taken short-term hits in the share price due to weather-related conditions, but I view this as transitory. Snow and ice keep people at home. Scorching weather tends to put people off pies and pasties, but this passes. So I'm looking at the GREGGS valuation, and on the 17th of April, it was down to £17.08. Now that's a yield of 4.1% and a PE of 11.2, with some net cash of 125.3 million at the year end. So, in my humble opinion, the market was now valuing GREGGS as a fully fledged income stock and ex-growth, as opposed to one where growth was still present but not quite as strong.
All right. So, for our benefit, can you perhaps elaborate on the terms growth and income?
It's often given as an either or choice, but companies do line up across the spectrum. There are out and out growth companies with stellar, expansive growth, with profits constantly being ploughed back in to pursue more growth. Then there are varying degrees of lesser growth as typically businesses and industries mature, where some money still goes into growth, but there can be more emphasis on distributing to shareholders as less is required by the business. And then there are out and out mature businesses where high percentages are paid out to shareholders, and there's typically a narrower dividend cover that's required. And of course, there are also businesses that are also contracting, and these are often value traps and best avoided. If we take another of my holdings, Tesco, it's the market leader. It is in a very mature industry, and when I was a boy, they were predators to all those little corner shops that have mostly gone. And Tesco are still growing, but it's now a case of eking and plodding growth. So I was looking at the share price, and if suddenly GREGGS discovered growth had disappeared, which I don't think for a moment it has, it could then pivot its strategy. It could terminate the expansion, manage the estate without recycling those profits back into ever more shops, and therefore that cash could make it an income play. That looks like a nice fallback from position from the current valuation.
What price did you pull the trigger at then?
I added at £21.37.
So you missed quite a bit of that upside from £17.08 then.
Well, most of the market was off around that time due to Donald and his tariffs. But when I'm looking at adding to the portfolio, out of 30 stocks, very often I find that there's 4 or 5 compelling at any one time. Then I have the difficult decision of which one to go for. Sometimes a valuation of prospects look really good, but a consideration is balancing that portfolio, and I pass on to build another position. On balance, I went for another, as I predicted there would be a bounce on some forthcoming results, which there was not. And I hoped that GREGGS would wait for me while I reloaded my gun. I I had some accrued dividends, but was awaiting a rather juicy one to land from Central Asia Metals, as that would have meant there was no longer an insignificant trifle going back into the market. Unfortunately, that payment coincided with a GREGGS trading update, which I anticipated would show things not as dire as expected. So that showed that the like-for-like in the first 20 weeks was now 2.9%. So that demonstrated some added strength. And the price bounced by about 7%. And I bought in when that dividend dropped. If I could have got in a day before, I would. But, sometimes the timetables don't always run in your favour, Paul.
Now, that trading update is the most recent information available. So what else did it contain?
Total sales were up 7.4%. There were 66 gross new shops with 20 net openings, and they remain confident of between 140 and 150 net openings for the full year. There's no change in the cost inflation expectations, and the board's expectations for the year remain the same. And there are some details on new offerings. They're always trotting out new products. There's peach iced tea and mint lemonade. They said there'd been strong growth in their pizza boxes. They'd launched mac and cheese, which said had gone viral on TikTok. And they also have a made-to-order range, which includes chicken burgers, wraps, and fish finger sandwiches, and they are now available in over 300 shops. They've introduced a new feta, red pepper, and spinach bake, and they've also extended some healthier options, such as their fat-free Greek-style yogurt with strawberry compote. They're constructing a new frozen product manufacturing and logistics facility in Derby and a national distribution centre in Kettering. And these are expected to be operational in 2026 and 2027, respectively. As a business, GREGGS continue to be agile and nimble. You can see by these openings that many are Regal locations where they can quickly take advantage of better sites. And they're described as a bakery chain, but they're not restricted by what they can offer. They can offer things like salads, yogurts, burgers, fish fingers, porridge, pizza, pasta. They continue to shapeshift, adapting to trends and demand.
So in contrast to Greg's strength, you have sent me a couple of links to other smaller bakery chains that have ceased trading.
Oddies, based in Nelson, not too far from me in Darwin, they've been trading for 120 years, and they had 13 shops, but they closed in January. And the reasons cited were the hangover from the pandemic, cost of living crisis, economic slowdown, cost of energy, and then there will have been those increased budget employer costs coming down the track. And then there's another one called Krusty Cobb. They've ceased after 55 years, and they've closed 9 shops in Devon and Somerset earlier this year. Those are just a couple of examples. But as I've said, Greggs are not just competing with bakeries, but are now across a wide range of food-on-the-go offerings. And hopefully, as that squeeze is put on the retail pound, Greggs have those economies of scale and deeper pockets to weather the storm while some of the competition are washed away. Dare I say, your small independent mom and pop business might stand a better chance than a small chain. With the increased employer costs, with these predominantly still being cash businesses, they may be tempted to mitigate the costs by declaring even less through the books than what really occurs. Now, to what degree will HMRC surveil how many £2 cups of tea have been put through the till? When I was in Indonesia in the winter, I was speaking to a retired barber, and he told me what a great business it was, as he had, it was all cash, and he had plenty of holidays to help him dispose of that cash mountain. And when I told him that I'd always been PAYE, he gave me something of a sad and sympathetic look.
Now, on the subject of how quickly you can serve customers, you tell me that you're pretty intolerant of queuing.
Yes, and more than 3 or 4, and generally I don't have the patience to hang around. And if I probably starved during World War II, but I'm sure there's a certain length of queue that becomes a deterrent to sales in general. However, there is a novel way around this, and it's becoming increasingly popular. What you do is you walk casually into the store, you walk straight to the front, you select what you want, and then you casually leave without paying, with just the staff looking on aghast. It's simple. So, yeah, if you go onto YouTube, there are legions of people being filmed doing this tried and tested method. And I mean, it's a sad indictment of what has happened to a once noble art of shoplifting. Any shoplifter worth their salt used to hone his or her skills in sleight of hand, misdirection, wearing an extra baggy coat, putting a shirt on under their own in the dressing room, wrapping the tin foil around the tag. Now there's no effort, Paul, no effort of thought, and these people don't even bother running away. Nobody's going to chase them. So shoplifting has been on the rise for some years, and for some perspective, I turn to a very good friend of mine, Andrew Cook. Now, Andrew was loss prevention supervisor at the Blackburn branch of Debenhams, and during his time, he managed to bring the stock loss down from 2.5%, that's pretty big, to approximately 0.6%. And there was a three-step approach for offenders. There's a fixed penalty fine that may not appear on a DBS check unless it was in a position of some responsibility, like a nurse or a carer. The second offence brought a caution, but no fine. And the third went to court. Now, Debenhams and the police had a close and successful partnership. And then there was a change of strategy. The police said that they were spending too much time at Debenhams and wanted store staff to prevent theft, confiscate, and then bar the culprits. Now, Debenhams pushed back on this, as they did not. This didn't present a deterrent, and the shoplifters would not respect having been barred and just return the next day. And that sounded a bit like Minority Report with Tom Cruise, pre-crime and the pre-cogs. So what happened then? It looks like the police put an article in the Lancashire Evening Telegraph. It was front page. It's still available. You can find it on the internet. And it says, Debenhams tops Blackburn's shoplifting hotspots list again. And just a couple of extracts from it. It says, senior police have called on Debenhams to be more proactive in preventing theft after officers spent almost 4 months of policing hours in the store last year. Inspector Abid Khan said, we find it difficult to engage with Debenhams. We've tried to contact senior managers to address the problem and end up going round in circles. He said that store detectives focus on apprehending shoplifters once they attempt to leave the store with stolen goods, rather than discourage them from stealing in the first place. He added that police had also asked for the store to be redesigned from the current layout, where high-value items are placed at the front of the store, but their request was turned down. The senior officers said that repeated visits to Debenhams were diverting officers from other jobs, and that if lower-level thefts were dealt with in store, it could free up police time to deal with more serious offenders and crack down on organised gangs who come into East Lancashire to specifically target shops in the area. So this led to Debenhams falling into line, and the inevitable stop loss started to climb again. Now, if you effectively decriminalise shoplifting and turn payment into a voluntary act, it's going to be chaos, as we are witnessing. And people in the queue with their wallets and purses must be wondering why they're paying when others are not. And recorded shoplifting offences increased 20% last year, and I wish I had that level of growth in my businesses. So GREGGS are trialling reconfiguring some stores by putting self-service food behind the counter, and let's see if it works. Perhaps the shoplifters will just start walking behind the counter. So, Paul, you once worked in retail. What was your experience of this problem, and have you any wider thoughts?
Well, yes, I worked for a large footwear and clothing retailers as their advertising manager many years ago. And I think it was on my first day, I was talking to one of the members of staff in the footwear department, and they were asked by the management to chase shoplifters. If somebody was seen to be trying to escape the building with a pair of shoes they hadn't paid for, it was actually company policy that the staff would actually confront them. And I remember saying to the girl, I said, so that must be a bit dangerous. I mean, what happens if they've got a knife or something? You're putting yourself at considerable risk for the sake of a pair of shoes. But that was the policy at the time. And I'm pretty certain that isn't these days. But they were quite happy to tackle shoplifters head on, with their staff, rather than require, security guards or calling the police all the time. Anyway, you mentioned Tesco's earlier. You are a shareholder, and that is where you do your regular shopping. But despite your holding in GREGGS, which is your 8th largest position, you're not actually a GREGGS customer.
There are a couple of factors in that. With the life I lead, I'm rarely now time poor and need food on the go. I have the time to prepare decent meals. We have a GREGGS in Darwin, but why would I walk into town for a pasta when I've got ribeye steak in the fridge? And also, when it comes to pies and pasties, and especially sausage rolls, I have the image in my mind's eye of fat and grease leaching into a paper bag. And you don't get a taut and chiselled physique like mine, Paul, when you're eating too much fatty food.
Uh-huh.
And I do see pastry really as a container, and it's used to encase other ingredients. And at my age, with my slowing metabolism, I've got to be a little bit more discerning with my intake, and my body is less forgiving when it comes to calories, and I can't quite run as quick as I used to burn it off. And if I'm being honest, I think I've always been a little bit snobbish about Greggs. I do like to eat well, and I've always seen Greggs as made down to a price rather than up to quality. I do use Greggs for coffee. I was travelling up the motorway a fortnight ago, and I called into the services. And very occasionally, I've had a sandwich.
Right, so to rectify this situation, we decided to do some market research. And instead of heading into Darwin or Bolton, it was off to the bright lights into the big city of Manchester.
Yes, I met you on the train, and we arrived at Manchester Victoria, where they have a Greggs actually. And I think we walked past a further 4 or 5 until we reached our destination on Oxford Road. Now, if you put the postcode in to on the Greggs site, the postcode for that shop, which is M15QA, there are some 16 shops within a 1 mile radius. So we walked past a few, and they all looked busy. Admittedly, it was around lunchtime. And the reason we walked past the others, we were looking for a shop where they had dine in. As you are my guest, I hardly wanted us traipse through the streets, sausage roll in hand. What if somebody recognised us from the podcast? Our reputation, such as it is, will be in tatters. Interestingly, Greg started offering a dining facility a number of years ago and had to go to court as they did not offer any toilet facilities. Now, Greg's argued that as the majority of their business was takeaway, not a cafe or restaurant, they did not need to provide them, but they lost the case. And I understand the ruling is that you have 10 or more seats, you need to provide toilets. So in the Greg's dinings that I've seen, there's generally a couple of modest tables, and it's not like a McDonald's. And I would imagine that they'll try and keep below that 10 number, make sure it's not breached, in order that they don't have to provide toilets, that they'll take up valuable space and require somebody to be constantly monitor them. So we went inside, and from the a la carte, I had the new red pepper feta and spinach bake, which was £2.10. I had a Cajun rice and barbecue chicken salad, which was £3.45, and I had another new product, the strawberry compote, which was £1.55, and a cappuccino at £2.15. And you, Paul, had the steak bake at £2.10, sweet potato bhaji and rice salad at £3.45, and a black coffee at £1.70. There was a promotion for the salads and regular hot drinks, and that gives it a £2.85 discount. So 2 meals cost us £13.65. So you were a cheap date, Paul, I'll say that much. And on to the quality of the food, I have to say, was an eye-opener for me. And I was really impressed how good it was. Perhaps things have moved on from what were my memories of disintegrating flaky pastry with a little filling inside. It wasn't just a filler, and I genuinely enjoyed it. And on the basis of what I had from the broad menu, I stand corrected. I don't think I'm going to start going out of my way to do a weekly trip to Greggs, but would use them again if circumstances arose. And at this point, I'll pass the microphone across to you, Paul, who will expand on the experience and what we learnt about pasties, pilfering, and pigeons.
Yes. Yes, it was an enlightening experience. The food was very good. I did enjoy it. It was good. And the shop was extremely clean, well presented. The staff were very friendly. But we wanted to go to a Greggs that had a dine-in facility, and we had been told that this one on Oxford Road offered that. However, when we arrived, the chairs had been turned upside down and the small eating area was taped off. So we spoke to a very nice Greggs employee and asked him why dining was not available. And he explained that because the door was always open, pigeons were flying in through the door and pinching food off the tables. So, despite people saying that Greggs are doing nothing to stop shoplifting, that's not entirely true. It's just that they're cracking down on pigeons, not on humans.
Well, Paul, right. Well, with that was the case. With your marketing hat on, it's a very simple product. There've been several TV programs about Greggs. There's been Inside Greggs 24/7, Greggs versus McDonald's, The Fast Feud, Inside Greggs, Britain's Best Bakery. This is all free marketing. What a dream. What have they consistently done over such a long time to keep the brand so popular and close to people's hearts?
Well, I think your experience was probably typical of a lot of people. The fact that they were sort of like positioned alongside a lot of convenience shops for that kind of takeaway food. But when people try the bakes, they call them bakes. Most other places call them pasties. They are very pleasantly surprised, and I agree. I think the quality of that was very good, and they did offer those other things. That we had, which were not simply thrown in just to sort of provide some kind of vegetarian or salad based option. They were genuine nice little tubs of food, and it was quite a satisfying lunch. So I think they've covered all the bases for people who have to go out and buy food, from a shop rather than take it to work. So, but I think the quality of what they offer, I think is definitely going to be a key factor in their success. So to round up then, what are your hopes and expectations for GREGGS in the near future?
Well, GREGGS is currently 6% of the portfolio, and it's my 8th holding. I have other positions I'd like to flesh out if valuations allow. And I'd like to see further evidence of how the business is performing before committing further capital. But I do think there's more in the tank. With the extra capacity that they're building, this will give them scope to reach 3,500 shops. Evening trade is the fastest growing. That's 9% of sales in 2024 versus 8.5% in 2023. And that's a massive market. The GREGGS app was scanned in 20.1% of company-managed shop transactions, and that's up from 12.5%. There's an increased number of shops offering delivery. That's 1,556, up from 1,440. And delivery sales are up 30.9% in 2024. That's representing 6.7% of company sales as against 5.6%. And then there's 48.5% of shops are now in what they call alternative locations, and these are petrol forecourts, roadsides, transport hubs, retail parks, supermarkets, universities and hospitals. And 10 years ago, these locations represented just 18.1% of the GREGGS estate. We mentioned how quickly GREGGS can change the menu. Equally, they're adept at changing location. And as they say in the army, improvise, adapt, overcome. There are very few businesses that can reinvent themselves at such pace. And of course, if they can stem and reduce the losses through shoplifting, that will also show growth. And it will be interesting how the shop refits go. Perhaps the stores will resemble some kind of fortification, serving you through a hatch with somebody looking on from a machine gun nest. But if GREGGS find a reconfiguration that works, with the shop fitting teams, I would expect that they could roll these out with each refit. And if nothing else, if they only make it a little bit more difficult with GREGGS, it could result in your average shoplifter taking his business elsewhere and going to the pound bakery either next door but one. So, and I suppose, just as parting shot, I suppose they'll now have me as the occasional customer, Paul.
Right. Okay. Well, thank you very much indeed for that update on the situation regarding GREGGS, and thanks again for lunch. Well, that's all for this episode. We hope that you enjoyed it. Please remember the content is for information only, and it is not financial advice. If you have a question for Mark for our Question in a Bottle podcast, just complete the form on our website, thedesertislandinvestor.co.uk. Thanks again for listening. See you next time.